The overlooked risk, sales and use tax compliance and accounts payable. Hi, my name is Robert Runo with Accounts Payable Professionals Group. Well, when most people think of accounts payable, they picture invoice approvals, payment runs, vendor communications, but there's a silent, often overlooked responsibility within AP that can expose a company to serious financial risks. Sales and use tax compliance. While it may not be at the top priority for every AP team, failure to handle these taxes properly can result in costly penalties and time-consuming audits. What is sales tax? What is use tax? And why does it matter in AP? Well, sales tax is charged by vendors at the time of sales for taxable goods and services, and it's collected on behalf of the state or local governments. Use tax, on the other hand, applies when sales tax wasn't collected, usually on out-of-state or online purchases. Now, in these cases, the burden falls on the buyer, your company, to self-assess and remit the tax. Since AP is responsible for processing payments, it's often the last line of defense before money leaves the company and the last opportunity to catch sales and use tax errors. Common AP mistakes that create tax risks. The AP team, especially when understaffed or undertrained in tax, may unknowingly contribute to compliance issues. Common pitfalls include paying invoices without reviewing the tax lines, assuming vendors always calculate the taxes correctly, failure to accrue use tax on tax-free invoices for taxable items, and leaving tax responsibilities entirely to purchasing or finance teams. Now, each of these mistakes opens the door to missed tax payments, which can be uncovered years later during a state audit. Now, what are the best practices for compliance? To reduce risk and improve accuracy, AP departments can adopt these practices. One, educate AP staff on which items and services are typically taxable, right? Two, use AP software that can flag invoices that are missing taxes. Three, partner with your tax or your finance teams to establish clear tax review workflows, right? And four, create use tax accrual procedures that document decisions for audit readiness. When and how to accrue use tax. When an invoice doesn't include sales tax, but the purchase is taxable, AP should identify the taxable amount, apply the appropriate use tax rate based on the buyer's location, accrue tax amount in the accounting system, and report supporting documentation, including why use tax was applied. This ensures the company remains compliant and avoids surprises during audits. Now, what are the costs of getting it wrong? Incorrect or missing tax payments can add up quickly. State auditors may go back several years, and penalties often include interest and fees. In addition to financial risks, companies may face reputational damage with vendors, reduced negotiating power, and strained relationships with tax authorities. Final thoughts. Sales and use tax compliance may not be glamorous, but it's essential. AP teams are in a unique position to prevent errors from becoming liabilities. With a little training and a few smart processes, AP can become a key player in keeping your organization tax compliant and audit ready. If your AP department isn't reviewing sales and use tax today, it's time to start. Your future self and your tax team will thank you. Well, thank you so much for hanging out with me today. My name is Robert. This has been AP Journal with the Accounts Payable Professionals Group. If there's a subject you would like me to cover, just go to ap-professionals.com/tips. Bye-bye.